Imagine a world where your government issues its own stablecoin, and major banks in Europe issue theirs too. In the next few minutes, we'll dive into how Tether might hit a $500 billion valuation, how European banks are building a euro stablecoin, and why Australia's new crypto laws could shake up the industry. Stay tuned. Tether, the powerhouse behind USDT, is reportedly preparing a massive capital raise that could value the company at around $500 billion. But that's not all. They're also planning to launch a US-compliant stablecoin named USAT aimed squarely at American users. Why does this matter? Because it marks a potential shift in how stablecoins are structured and regulated. USDT has dominated global markets, but many US users want a version that fits neatly within US regulatory frameworks. USAT aims to deliver just that by being issued under a trusted, chartered bank, Anchorage Digital. If Tether succeeds, it could reshape the balance of power in stablecoins, not just by scale, but by legitimacy. Expect scrutiny over reserve audits, compliance, and integration with U.S. banking infrastructure. In the coming months, what we watch is whether USAT gets regulatory green lights, how markets react, and whether existing stablecoins like USDC or DAI feel pressure. Across the Atlantic, a major development is underway. Numerous European banks, including ING and UniCredit, are collaborating to launch a euro-denominated stablecoin under the upcoming MiCA rules. This is not a small pilot. It's a coordinated push by established banks to bring stablecoins into mainstream finance in Europe. The plan is to roll out in the second half of 2026, fully compliant with the Markets in Crypto Assets (MiCA) regulatory regime. The advantage? It could dramatically increase trust from regulators, reduce friction in cross-border payments inside the Eurozone, and challenge dollar dominance in stablecoins. But it won't be easy. The project must overcome trust gaps, technical integration, and interoperability with existing blockchain networks. If this experiment succeeds, we might see a wave of national, regional stablecoins backed by banks, not just crypto-native issuers. And that could change the architecture of the entire stablecoin landscape. Turning our attention to Australia, the government has unveiled draft legislation to regulate its crypto sector under the existing Australian Financial Services Licence (AFSL) framework. Under the proposals, crypto operators would need to meet governance and conduct standards. Severe penalties are proposed, up to $16.5 million or 10% of annual turnover for violations. Some exemptions exist. Operations handling less than $5,000 per user or under $10 million annual transactions might be exempt. For Australian users and projects, this could mean more legitimacy, good for institutional adoption, but also more regulatory burden. Smaller projects may struggle to comply. In short, we could see both consolidation and increased security. One to watch: how consultation feedback reshapes the final version. The public comment period is open until October 24th. So that's a wrap on today's major crypto shifts. Tether's push toward USAT, European banks building a euro stablecoin, and Australia's move toward regulated crypto under AFSL. Next episode, we'll unpack how spot ETF flows are influencing price action. Look at RUPAway, real-world assets, tokens making waves, and examine the altcoin season signals analysts are watching. If you got value from today's breakdown, hit that like button, subscribe so you don't miss future episodes, and drop a comment to tell me which topic you want deep dives on. USAT, Euro stablecoin, ETFs, RWA, etc. Thanks for listening/watching. See you next time.